Hey everybody, this is Hyperwave. I am going to try to be a little quiet so that I don't piss everybody off, although I'm a casual businesswoman. And this one's going to be really specific. Oh wow, I can hear myself in the background. So while I figured it out. Okay. You know that happens every time. Anyways, this one's going to be really specific to energy stocks, which ones, how. I have a background in it. Tyler has a background in it, much more of a background than I have in it. But we may diverge in opinion because I'm going to look at it from fundamentals. I'm actually going to pull up a stock. We haven't talked about this one and see if he thinks to buy or not. I do. We also have some contrarian views. We'll try not to get too many tomatoes thrown at our screens today when it comes to renewables in general. But with that said, I will throw it over to Tyler for now. Ty, also, can you give like a tiny bit of a background, because you actually are an expert in investing in specifically renewable energy ETFs, I believe. And hi.
Sure. Hello, everybody. Thank you. This will be fun. We're going to get through it in an hour. It's a huge topic, but there's a lot of very interesting twists and turns in it. Basically, what we're talking about today is sustainability, renewable energy, in the environment in general, clean energy as opposed to renewable energy. They aren't the same thing. And then topics like deforestation, all put together into this bucket that people kind of throw around as sustainability. It's only been around for about 15 years, and it had huge interest and still does today, but somewhere along the line, almost everybody forgot to ask the question, do any of these things really make any money? Is it a way that I can invest as well as attempting to do well for the environment? And that's always a very dangerous question from an investing point of view. I think a pretty good rule is if there's something you really believe in and you really want to change, take the money that you were going to invest in that and donate it to charity. Let them do it. Now they've got the money. You can write it off of your taxes up to a certain level, but now you're not trying to conflate things that you believe in with things that are good investments. And that's a very important distinction, as we will see. What we're going to look at today is we're going to look at wind, we're going to look at solar, we're going to look at hydropower, we're going to look at nuclear, because a lot of people asked about it. We're going to look at renewable energy and clean energy, and we're going to do it by looking at 7 different ETFs, and we're going to look at the 3 biggest holdings that each of those 7 ETFs have. A little bit about my background in this area. When I was building Lucid investment strategies after I had semi-retired, I actually had 2 jobs. One was building and running Lucid investment strategies. The other was I was the chief strategist for a hedge fund called Terra Verde, TERRAVERDE, Green Earth. And what that hedge fund did is it invested in other hedge funds that were specialists in various areas of the things I just talked about: wind, solar, power, thermo, hydro, clean energy, water in various forms, and renewable energy and sustainable energy. So each of those hedge funds, that's all they invested in. And we then put money into each one of those hedge funds and had our own fund that was a fund of funds of sustainable hedge funds that did sustainable investing. And I did that full time for 3 years. I commuted into New York City to do that from way out on Long Island. It took me 4 hours, 2 hours in, 2 hours out. Finally, I was so into this project that I moved into the city so I could commute just within 10 or 15 minutes of the office, which was at Rockefeller Center. which was a wonderful place to be because I overlooked the ice skating rink at Rockefeller Center and right down on the Christmas tree. We were up on the 11th floor and had just unbelievable views. But all we did all day long was study the companies that were studied by the hedge funds that were attempting to invest so that investors could make money in this area. Okay, so with your understanding that I'm not new to this game, I'm going to turn it back to Leah. She's got a couple of observations to make because she was looking at some things for this vlog, and I was doing the same thing. And one of the stocks that I came up with that I have got lumped under a uranium ETF is one that she is also very interested in on a fundamental basis. So I'm going to turn it back to Leah just for a moment.
All right. And now I never do the screen share, so let's see if I dox everything in my life. Here we go. Yeah, so, all right, hopefully people can see this. So it was kind of crazy because Tyler told me the title. I ran to the wing and was thinking about which company I was most interested in that actually I would say is a buy, because I'm actually extraordinarily bearish on everything quote unquote sustainable energy. That one's going to get me in trouble. Tyler and I will maybe make a mention of this. I will say that we were talking and we are going to do something on fundamentals and fundamental analysis like next week, because what I'm going to just run through really quickly is actually what I'm seeing, and also the fact that all you guys can pull this up anytime. So this is Nextera. We have our nice little TA thrown up here. I know Nick is watching, so that's fun. So he's probably enjoying the fact that this is small volume, but I'll come right back to this. So, okay, so literally all you have to do for Nextera or for any of these is throw it up on Bloomberg. It is actually very important to start looking at, hey, Ty, do you think that, you know, any of these that are shown, I wouldn't mind a $6 million annual compensation before you get the rest of the kickbacks. But just kidding. It's really important to look at governance structure, everything. But what's most important is, and again, all this is just throw it up and is actually their key stats are looking really solid. Their price to book, you know, we'll explain all this. I'm just going really quickly. But if you throw it up on an annual, their income statement, honestly, and then what's really important, and we're not going to go into it today, is just to ensure that you're understanding industry specifics. Because, you know, a lot of people say that this is a massive debt to assets ratio, but, and also that their financing, right, you know, like there is, that's really bad for their cash flow, obviously, -11. But people really need to understand what that means when it comes to oil and gas and just how much money is put in. Okay, so what I'm just going to say is throw up on Edgar. Any of these companies that are publicly traded, they have to file with Edgar, and what you get is absolutely everything. Absolutely everything. You know, it goes forever. So, you know, we are not going to get into this today, but what I did want to look at really quickly when Tyler was talking about the fact that we were going to pull this up is just simply, you know, how did their fundamentals look before I looked at TA, because I'm trying my best to learn TA. And they looked solid. They do look solid. And as everybody here knows, for the most part, for the overall ONG industry, and yes, WTI oil is actually trading above 60 today. I have been actually very bullish for the year, but that is obviously looking at something a bit different. But I'm actually very bearish when it comes to sustainable energy, and for a lot of reasons. Again, that's, you know, just very different, that we're not going to get into, at least right now, maybe a little bit later in this vlog, but we'll be quick. Is just, you know, I mean, this is historical. We're looking at the weekly. Tyler loves the weekly. I'm going to go a little bit closer, have a little bit more fun with this one. But on the daily also, I mean, this is sexy, I think. And just like from the start of the year, I mean, over the past 12 months, like, you know, if we even want to throw it further back, but like, you know, it's rallying. I mean, like who wouldn't, what investors and traders aren't going to take note of this stock? I personally, right? I mean, its equity price when we were looking back, you know, it's climbing, you know, the shares, it's just everything is looking pretty good in my book as at least a short-term buy for this. And volatility for this week is what is it, 1.41%, which is more than 1.14% recorded over the past month. I mean, I'd be bullish. I'd be bullish on this one. I'd say it's a buy, and again, for the 14 day RSI, obviously oversold, but I do think that it's everything I think is looking pretty good. And again, trading volume has lost shares compared to readings over the past 3 months, but I mean, yes, like there is reduced activity from short-term traders as per the session. But again, if we're looking at fundamentals and we're looking at ONG, which, and again, we're looking at specifically Nextera, which is just massive and does beautiful M&A plays. I mean, they just own so many companies, which again, you can always look up for free. And Edgar really goes into all of them, but just in Bloomberg in general, I just think that I would call this one a buy. But I know nothing about TA. So, Tyler, am I out of my mind on this one?
No, this is a very good-looking stock. And what we want to do is like we always do, which is we start at the top with the entire industry, and then we break the industry down into its subcomponents. Then we look at the longest term, intermediate term, and short term, and then we look at where they all stand. And that's what we're going to do right now by, first of all, bringing up an ETF. And then after we do that, I'll bring up the second, third, fourth, fifth, sixth, and seventh ETF. And we're going to look at it over various time periods and let you conclude what you think is relevant. And then I'll give you my conclusions about it. And let's do that by jumping right on here.
Now, Tyler would be on the monthly if I'm looking at the. I might as well have gone down to the minute so that we play around with each other.
Right. Okay. So what we're going to do is we're going to start with FAN. This stands for First Trust Exchange Global Wind. FAN, F-A-N, Wind. And it looks fairly decent from the point of view that it's about where it was 2 years ago. It did the same similar thing as the stock market did. Hit a peak, went down, hit a peak, went down, hit a new peak, went down, and now it's coming back. So nothing special there. But now I'm going to roll it back. And this is when this thing began, trading at $30 a share. The year is 2008 and 9. This is 10 years ago. Everybody that rushed into sustainability, this is what they were met with. Now, this particular fund is one of the few that is just wind-powered renewable energy. Renewable in that the wind always comes back, but you just don't know when and where it comes back. So this ETF holds a number of stocks. We're going to look at 3 of them in just a minute. But notice that we are selling at $13 a share after coming out at $30 a share 10 years later. One of the worst investments of all times. The second one we're going to look at is called Invesco Water Resources. Now that looks pretty darn good. Here's the same time period, the last 10 years, and it is doing as well, if not better, than the stock market off the lows. So we've got one area, which is wind power. The second, which is water resources, which includes not only hydroelectric and thermal, but also the infrastructure, pipelines within cities, clean water, filtration systems. And obviously that's been a very strong area of the market. We'll look at individual stocks. This next one is solar power. Remember solar power? Remember how everybody was putting billions of dollars, including President Obama, into solar companies? This is what has happened to solar companies over the last decade. They started out at 280 on this index, and they're now selling at 23. They've lost 90% of their value. I'm going to look at another water. This is another clean energy. This is called, it's PBW, by the way. I'll give you the tickers of the solar is TAN, TAN. PHO is water resources. FAN is wind power. Okay. This is clean energy ETF over the last 10 years. Started out looking pretty darn good until the stock market crash and has never responded upwards from that point. From a high of 140, it's now trading at 26. The next one we're going to look at is called Global Alternative Energy, and this is a Van Eck ETF. Same story. Up as high as $175, trading at 61, little more than a third or 40% of its value over a 10-year period. Horrible. This one looks pretty good. It didn't come along until 2008 like some of these others did, immediately fell apart, ran up, almost got back to its high, and in the recent past, it's actually outperformed the stock market on this run up, and we are this past month actually went to all new time highs. Now this one is called PIO, and that stands for the Invesco Global Water ETF. The first one we looked at, which was PHO, was just domestic water. This one, PIO, is global water, including US, but with a large number of projects around the world. Okay, so that's the first 6. Now I'm going to show you one more, which is URA, because so many people were asking about it. This is the Global X Uranium Fund. Anybody that doesn't believe that uranium and nuclear power is clean energy needs to think about their definitions. This is the cleanest of all clean energy. Always has been, always will be. No emissions other than steam. Now, on 3 or 4 occasions over the last 30 years, there have been problems with nuclear power plants where either through an earthquake in Japan or through a meltdown in Three River or in Chernobyl, and there's been 1 or 2 others that weren't so dramatic. But what you got to remember are there are 400 nuclear power plants around the world producing an average of 11% of all the energy in the world, and in many cases 30 to 50% of all the energy in various countries. And with all of those over that long of a period of time, we've only had a handful of incidents, and none of them had to do with being other than clean energy. They had to do with accidents that occurred either through acts of nature or other things. But in any case, this industry was killed in the 1970s and 80s by environmentalists, all of whom now are firmly on the side of building as many of these nuclear power plants as possible. It's very, very cheap energy, and it's very, very clean. But that doesn't mean it's a good investment. This is over the last 8 years, 9 years, we've gone from 130 down to 12, 90%. Okay. So what's the report card look like for investing in sustainability, renewable energy, the environment, clean energy. It's horrible. There are a couple of bright spots, and those basically have to do with very well-run groups or companies that have taken advantage or in the right place or at the right time. We're going to take a look at them. The way we're going to do it is go back to the first one, FAN, the Wind Energy ETF, FAN. I'm going to take a look at the three biggest positions that they own by company. And here's the first one. It's called Orsted, ORSTED. It's only been around for 2 years, and you can see that it's gone from 240 up to 506 in a straight line. Well, it doesn't have much of a history, but obviously they're doing something right, and FAN has put the right money in it at the right time. The second one is called SGRE, which stands for Siemens Gamesa Renewable Energy. This is the giant Siemens company. This particular division has not been around that long. And you can see it started out in 2017 with a drop, and now it's trying to come back a little bit. So that doesn't tell us very much about the company other than it's enormous. The third one, in terms of the size of the companies owned by the ETF, is called Vestas Wind Systems, VWS, Victor William Sierra. It looks very good, very strong. It's double topped with back in 2008. This was the peak of all those other clean energy and renewable energy. The big drop went much further down, but has come all the way back up to where it started. Another big drop not too long ago, and now back up again. Reasonable, something to look at from an individual company's point of view. Okay, now we'll go to the second ETF again, which is this one. This is the Water Resource Fund. I happen to own this one for clients under discretion, and we've owned this for quite a while. You will notice that this run in 2016. One of the best industries going was sustainable energy in 2016 and 2017. The average ETF that we held was up 30%, while the stock market was up about 30% less than that, or up about 20%. So looking very strong. Let's take a look at its constituents. Here's the biggest holding they have, which is called American Waterworks. A lot of you might know this company. It's a fabulous company, obviously. This is the run since 2009. Just straight on up. Started at 20 bucks. It's at 107, and it's been going to new highs every month since. The second holding here is called Ecolab, ECL, Ecolab. Same thing, going all the way back. Here's the drop in 2007, 8, and 9. You barely noticed it, and straight up since then. Water resources around the world are one of the rarest and most valuable and underpriced commodities there is. And because of that, companies that can take advantage of cleaning up saline water or seawater and can move it and purify it and work on sewage disposal are in huge demand, as can be seen by this. So all of a sudden, we're beginning to see a little bit different picture if we just don't talk about, in general, sustainability, clean energy, but we get very specific, not only with these ETFs, but with individual companies. Here is the third company that is owned by this ETF. It's called Roper Technologies, ROP. The exact same chart as you've seen on these other ones. So anybody for the last decade that has done their homework and not gotten caught up in all the hype about clean energy in general could have hit a home run and is still hitting a home run, as you can see on the right of this chart, which is greatly outperforming the stock markets. Okay, let's take a look at the third, which is the solar. This is TAN, T-A-N. We took a look at the chart. It looks horrible. Let's see if there's anything that is being owned within this that makes any sense. First of all, we're going to look at SEDG, which stands for Solar Edge Technologies. It's only been around since 2016. Ran up, came down, went up very strongly from $12 to almost $60, and now has pulled back. But looks very interesting, something to explore that's running counter to the solar industry as a whole. And that's what you'd expect by looking at some of these ETFs. The ETFs that we are looking at are ones that I used within the hedge funds in order to hedge positions that other managers had. But I always made sure that the stocks that were owned by these ETFs had the good housekeeping seal of approval by the hedge fund managers that were experts in these areas. The next one we're going to look at is First Solar. You've heard a lot about it. It was the biggest for a long period of time back in 07, 08, and 09. It crashed. Looks very hyperwave-ish to me in a way, but not really. It didn't have a long enough track record, as most of these don't. But forgetting that, after crashing, it's never really come back up. We're sitting right around $50. This used to be $300. The probability that the reason it's in this ETF is because it was put in earlier and there's nobody bigger or better in the industry. And so because an ETF doesn't change their holdings, it's still there. I would take a look at it for some other reasons. We're not going to analyze that right now, but you'll notice a lot of these have got triple tops and they've got rising bottoms, which means at some point out here in the future, we could get a very big break to the upside. The next one in this is called Canadian Solar, symbol C as in Carl, S as in Sierra, I as in Igloo, Q, S, CSIQ. And it's been around for a long time. It's up a lot higher than these other solar stocks relative to where it had been at the top. It came off these bottoms pretty well. Maybe something's going on there, maybe not, but it's something for you to look at. The third one that we looked at was called PBW, which stands for the Wilderkin Clean Energy ETF, another Invesco exchange traded fund. Wilderkin is actually an index that you can find on Bloomberg for the entire sustainability project. Most of the money flowing into this area has gone into building indexes and attempting to rip down companies that are engaged in fossil fuels, not in building companies that make a lot of money or should be invested in. And that is a very important distinction. Let's take a look at what this owns, and we'll start with Plug, P-L-U-G, Plug Power. Very hyperwave-ish at the beginning and has been dead ever since. One of the biggest holdings now. They're hoping it's going to pop up above this declining channel, but again, it's been in there since the beginning. It's one of the largest holdings. Next one, JKS, Jinko, Jinko Solar Holding. JKS is the symbol. This looks reasonable. you know, this is 2011, down in 2012, back up to where it was, back down. Nothing like the ones or the ETF itself. It really seems to go through cycles, and maybe it started a new up cycle. That might be one to take a look at if you're interested in solar. Okay, excuse me, in clean energy. Okay, that's plug JKS. The last one I want to look at is called OLED, Universal Display. Now, Universal Display does a lot of other things, but it's used in a lot of ways with lighting and the clean lithium and various clean lighting sources and display sources, and has done really quite well until recently with this huge drop, but you can see how strong it's coming back. The symbol there is OLED. The fifth one I want to look at is GEX, which is the Global Alternative Energy. This is Van Eck Global Alternative. We've looked at a domestic water company or ETF, a global water ETF. We've looked at alternative energy that's mainly domestic. This one is a global one. Same thing, terrible. Maybe it's forming a bottom here. You've got highs above highs. You've got a pretty good overhead resistance. Maybe you've got some kind of an ascending triangle, but it might be something you want to look at for GEX in general. Let's take a look at their holdings. The first one is AME, Amatech. Some of you have sent to us Amatech as a hyperwave. 1 across here, 2, 3, maybe still in 3, maybe a 4. I've got a broadening top here, 1, 5, 4, 3, 2, 1, which tends to be a reversal pattern. But other than that, it seems to be a very strong company. It'd be something on your radar if you're interested in sustainable energy. The next one is called Microchip Technology. Now remember, these are all under this GEX ETF, which is Global Alternative Energy. And chips are used in a lot of the things that are being developed technologically for making more efficient energy production. Tesla is actually owned by several of these renewable energy or clean energy ETFs. I didn't include that in there because we've talked about it in other places. But again, this is a great looking chart, very similar to S&P and NASDAQ and Dow. Microchip Technology, MCHP. And finally, with this one, there's ETN, which stands for Eaton Corp. And a lot of people say, what does Eaton Corp have to do? Well, you're going to have to do your own exploration at what these companies do. You can use Leah's hint by going to Edgar, or just go onto your Fidelity or your Schwab or your E-Trade and do a little research on any of these companies, and they'll give you all the background you want. But Eaton Corp has been a great performer over the last 20 years. It's pulled back along with the market. It would be one to consider. All right. Now we're going to go to PIO, which again is the water company, but it's global. And I'm going to bring up 3 positions. One that we've been talking about, and we use this in our webinar, that one of our followers has been investing in. This is Danaher. This is a water company. You know, it's drinking water, but they do a lot of other things. It is in a spectacular uptrend. look at this. If this is a phase, it's gone on since 2009 and now broken out to even a higher phase. It's just incredible stock. It is considered to be in this industry of water, clean water, renewable water from sources like springs and other things like that. The next one is GEBN, which stands for Geberit. Geberit is the name of the company. The symbol is GE as in echo, B as in boy, N as in Nancy. GEBN. Again, an awfully good looking chart from the left to the right with a couple of interspersed problems. This is actually 2007, 8, and 9, and this is the current situation, but you can see what happens in between. Very powerful moves. Water seems to be the winner in this debate. Just us going over this very cursory study just to give you an idea of what is available without getting locked into the idea that anything that calls itself sustainable or renewable or clean or environmentally friendly has anything to do with its investment potential. But within this group, there are some fabulous potential buys. All right. The last one we're going to look at is uranium. This is the Global Uranium ETF, URA, and we talked before about what it has done, which has been nothing. There's been a tremendous amount of talk for the last 5 years that because it is so inexpensive, once you've got these behemoth things built up to safety specifications, the energy it produces is so cheap relative to everything else. And I'm talking about everything else. Now, someday maybe solar can be converted so efficiently through the work that Tesla and others are doing that statement won't be true. But one of the things missed in the debate about solar is how damaging to the environment it is to build the solar panels and to run the batteries. So you need to look into that side of the story as well if you're going to be criticizing the nuclear space. But let's take a look at 3 companies owned by URA. The first one is one of the largest, if not the largest, uranium producers in the world. It's called Cameco, CCJ. It's had a rough period since 07, 08, 09. It is coming back a little bit, but you'll see all the uranium charts, price charts, look very similar to the ones we're going to be looking at with these companies. If you want to own the biggest producer of uranium in the world, and by the way, take a look at the number of nuclear power plants under construction around the world. The U.S. is trying to get a couple of them approved, and they take 5 to 10 years to build them after the approval. China puts them up, as fast as corn grows. Okay, that's Cameco. Next one, and this is pretty funny because this is the one that I had picked out. It's called Next Gen Energy, NXE. And I got it mixed up with what Leah was talking about with it, which was NEE. And so when she was showing me that chart, I had to go back and make sure that I was looking at the right chart. And obviously I was not. But this is the chart that I wanted to show because this is in the uranium ETF and is obviously doing very, very well. Now, notice it's only been around since 2014. It had a great pop in 2016 where we went from 25 cents up to $1.65, pulled back. Recently, meaning back in 2017, it ran up to 323 and pulled back. It's now in an area of some kind of support from back over here. If you are interested in the uranium play, that might be one you would want to pull up and take a closer look at. Very few people know about it, but that's the kind of thing you can find when you look at ETFs, particularly newer ETFs, or ones where they have been forced to replace positions that either went out of business or don't have the liquidity required by the ETF. This next one is AZZUF, which is called a Zarg Uranium, AZZUF. And this is one that was up at $2. It reminds me of the one we just looked at, NEE, and then has fallen all the way back down to 16 cents. So that is the kind of thing that you're going to find in fairly large positions in some of these ETFs. You can just Google uranium stocks and you'll find hundreds and hundreds of them mentioned all over the world. But I would always go back and I would check with either mutual funds that have uranium weightings that you can find in the description of the funds, or ETFs that are specifically designed to take advantage. Until the price of uranium actually begins to move up, this thing is dead in the water. Okay, so we covered a lot of things very quickly, and we're 15 minutes to the good. So what I'd like to do is get back on with my partner by first getting off of screen share and then making just a couple of observations about investment techniques in general. One of the things that I found very frustrating as an institutional manager is we would get clients that would dictate to us, because of their either religious beliefs or their social beliefs or their political beliefs, things they didn't want us to invest in. Not because they weren't in good investments, but because they didn't strike those people in a certain way. And so we would get restrictions saying you cannot buy any companies that manufacture guns. You cannot buy any companies that produce and sell liquor or beer. You cannot put money into any cigarette or tobacco companies. And then there are all kinds of religious things having to do with if you believe you should go to hospitals and have surgeries or not. If you don't, then you restrict us in terms of buying medical instrumentation companies. My point of going into that is, as soon as you restrict among all the possible opportunities, ones that might turn out to be good investments, you've got to ask yourself, should you be taking money that you are thinking about investing and don't invest it, but donate it? Donate it to the church. Donate it to a charity that's working to reverse deforestation in the Amazon. Donate it to micro banking charities that then put it together with real companies where they've done the research. In other words, don't mix up, and this is me speaking just personally, don't mix up what I say taking cash and putting it into an asset. I would rather lose opportunity after opportunity after opportunity till I find the right one, the right trend, and then I want to write that trend up. When you bring in the social, the ethical, the moral side of the equation, what you've just done is you have imposed on a potential opportunity something that, if you are investing in that thing, in other words, you are investing in something like solar companies. because you really believe that that is the answer to overcoming with fossil fuel emissions. You've made that conclusion, rightly or wrongly. You made that, you believe in it. So you take money that you've earned, instead of donating it to the wildlife fund or donating it to a charity who's going to use it for a specific thing that you believe in, you are going to take your cash and invest it in that thing you believe in, solar power, or, by the way, Bitcoin. And once you've done that, once you've mixed your beliefs with the investment properties of the thing you are putting it in, what do you do when it starts going the other way? Well, you ride the solar down for 10 years and lose 90% of your money. Well, how did you help the planet? More importantly, what did you do for your own wealth? So again, be very careful. I'm not saying don't do it or do it. I'm just saying my approach is when you take hard-earned dollars and make a decision you're going to get out of safe fiat US dollars and do something with it, either give it away to something you believe in or invest in something that is in a trend that will make you more money than the cash did. Or what you can do is don't do any of those things and simply go to Vegas and put it all on red or black. But the reason I'm going into that line of thinking is because of this whole question of sustainability, renewable energy, environmental, clean energy, deforestation, and all of its derivatives. Don't mix that up if you believe that is one of the most important things to be doing, then go do it. Go help. But don't put your money in it.
I think we're still live. Okay, I don't know. I can't tell. Tyler, I think we cut out. Tyler, or I think Tyler cut out. All you hear is music? Okay. Ty, you're frozen. Ty is frozen. Is this still going? Yeah, I see myself online. Okay. Well, I guess I should probably close this out. Is actually pretty, well, I don't know. I'm trying to get Tyler like 1 more second. Important thing that Tyler is trying to say, although very controversial if everybody understood it. In essence, don't just invest in faith, but be very careful with money management. There was definitely going to be a lot of points I was going to add to it and actually probably shake Tyler up on. But I think that we will let you guys go for the day then. Bump, bump. Yeah, that's about right. Maybe Tyler will be able to sign back in. I saw that he just did that. One thing I was going to say, which is different than what Tyler's going to say, is just simply put, also, if you at least can become an angel investor, Nick, this is to you. But no, that, you know, there's a lot of other ways you can play things, not just if you're talking about your portfolio, but right, you know, I mean, you can invest in certain companies if you do believe that not only are they good buys, but also that specifically. All right, I'm waiting for Tyler here. All right, I think I'll let you guys go. All right, I'll leave you on that. Yes, just simply put, if you do want to put your money to work, if you do want to get a solid IRR, if you do also want to be investing in things that you believe in, then sure, you can play, you know, the venture capital game. You can be an angel investor. You can do a lot of other things also outside your portfolio and play around with that. As an example, my former company, Veterati, right? We were a for-profit company that helped connect unemployed and transitioning veterans to mentors and service a job placement. Correct. So the reason that we were for profit, though, among a lot of other reasons, was, I'm waiting for Tyler here, is that it wasn't competition for donor dollars, but instead one that it was very important to ensure the longevity of. I can hear you. Okay, we can't see Tyler. Long story short, you can definitely invest in companies that you believe in, and also by investing in companies that you believe in different ways, you're able to have a bigger say. You can get a board seat. We can talk at another vlog about how to actually manage positions in venture capital and institutional capital. I will stop private equity if you have a hedge fund. If you want to build a hedge fund, how you actually structure those deals, what's a vesting schedule, what's dilution of shares, what's all these different things. But there's a lot of opportunities out there. Tyler's absolutely correct. But the essence of what he was saying is don't just follow blind faith of believing in a cause and trying to put your money, Tyler's calling, when it's going to be a bad investment, especially for your IRA and 401k, and then you got to take care of that. But there are solid buys, but you do need to be careful. Okay, I will stop rambling because we don't have Tyler here, and I think you guys are here just to listen to Ty. So, bye, everybody.